I'm Sam Slater from Chelsea, and I'm here at home talking to Darius in his home with just a very brief update for our clients on what's been happening in markets and what's been going on with the Chelsea VT managed funds. Darius, it's the 2nd of April today, so are you able to give us a brief context as to what's been happening?
Yeah, I mean, it's been absolutely crazy in markets, really, since around the 20th of February. Um, I'm in my 25th year working at Chelsea, and it's not just we haven't seen bear markets before, but this time it's been the speed of the fall has been so rapid as markets have rightly become concerned about companies' ability to make future earnings. And stock market's a discounting machine, and it discounted a lot of pain pretty quickly. We've seen incredible volatility, only really seen last in the financial crisis, but the sort of speed from, markets were at sort of, the UK stock market was at 7,400 in mid-February and got into the 4,900s only about 9 days ago. So it's been incredibly volatile, but it's impossible to call the bottom, but I think most of the pain has now been felt.
And all of Chelsea's staff's obviously working from home now. So how does that actually work in practice? What are the phone teams doing? And how are you guys working as investment advisors on the fund?
Yeah, I mean, as a regulated entity, we have to have something called a disaster recovery plan. You make it in the expectation of never having to use it, and so that we are now in the disaster recovery. We have managed from both sides of our business, both from the fund research, communications, and running the funds on the investment side, to be able to work extremely well via video conference. Juliet, myself, James, and Ryan have a call at 8 o'clock every morning just to discuss how markets have opened, what's happened in Asia, and how the US closed overnight. But I think just as importantly is Sam Holder and his operations team are fully functioning. We have one member of staff who lives locally going in to deal with postal applications and the day's business. But all calls are now diverted on a loop to our operations team, so that actually, I think from a client perspective, hopefully you shouldn't notice really any change at all. So whilst we are in these unprecedented times, we have been able to completely fully function as a business, which is great for us, but also hopefully great for our clients.
And thinking about the VT Chelsea managed funds in particular, what changes, if anything, have you made to them over the past few weeks?
Well, firstly, I'd like to say a huge thank you to all the investors in the VT funds. It is quite easy to panic when markets are falling and sell. And we know that some clients have been selling out of other products and going into cash, but we've seen, and I mean this, little or no redemptions in the VT funds. In fact, we've actually been having clients buying more of the fund of funds in the last week. So firstly, I'd like to say a massive thank you to all our loyal investors. It's been a really choppy market, and not just what we've seen, but speaking to some of our underlying funds managers, these markets have thrown up great opportunities. If you look back to what we discussed, Sam, at the beginning of the year, mostly everything looked pretty expensive and there wasn't huge amounts of opportunity. Now, when stock markets are down anywhere between 20 and 30%, and in some instances, some of the investment trusts that we look at have fallen even more than that. They have subsequently bounced back, but we were buying some of the investment trusts which had fallen 50%, and actually, in some instances, they made 30% in 2 or 3 days as the market recovered and the forced selling stopped. So we've had to try as best as we can to be brave and to top up into equities as markets have fallen, and selectively we have done that. So yeah, we have been very busy. I've been saying to my colleagues, it's really easy. No, it's easier running money when stock markets are going up. It's much more challenging and stressful when markets are falling and falling as quickly as they have. So yeah, I think we've been very busy and trying to take selected opportunities without adding too much risk to the funds.
So a lot of our clients are actually income investors, and there's no doubt a lot of worry with all the dividend cuts that we've seen over the past few days. How is that going to impact income going forward, do you think, and how have you been addressing it in the monthly income fund?
Yeah, I mean, the vast majority of people who buy the monthly income fund have bought the income share class, i.e. they want and need that income. Maybe for reassurance, as we sit here on the 2nd of April, whilst there are swathes of dividend cuts globally in lots of sectors, actually our own distribution is going to be protected up until the end of June. All dividend payments come with a 3-month lag. So from a client's perspective, they should see no change up to September. So you should get actually a bonus month in September. Hard to fully quantify it, but it's going to be at least double the normal payout and maybe 2.5 times the normal payout. Then what happens after that is still unclear. We have spoken to one of our preferred UK equity income managers that's in our fund. He's forecasting a 40% cut in his yield. What I think it again would be unwise to do for any of us to panic. This really is quite new. Centrica cut its dividend this morning. All the UK banks have been told by the British government to not pay dividends, even though they probably could, so that they can help to support the recovery. So I think, and it would be unwise to make any huge assumptions, we probably will see a decrease in the dividend declared from July onwards, but we are working hard to rotate into some of the higher yielding areas. We do have actually now today in excess of 10% of cash in the monthly income fund. So we will try to deploy that into some higher yielding areas. For instance, the bond market is much more attractive than it was at the start of the year. Some corporate bond funds are now yielding 5. So we are going to be taking a position very shortly in a corporate bond fund, which we think should add to our dividend. If we can keep the yield at around a 4% mark, it might be a little lower. In the current climate when equities are cutting by 30-40%, we think that would be pretty good. So we're good for 4 or 5 months. So no panic, and we're working really hard. We spent the majority of the last 3 days looking at the dividend and the prospective dividends. So hopefully we will end up cutting much less than the market. And again, a number of the managers we have spoken to, we spoke with our big European equity income holding yesterday. They're hopeful that even if there is dividend cuts, that actually that they might be short-lived through the second half of 2020. And then we could really see a sharp bounce back in dividends later, either in 2020 or early in 2021, as hopefully the economy returns to normal. And then we might be able to boost that income later on in the year.
Thank you. And to our clients, please remember we are here on the end of the telephone. It's 020 7384 7300. We're here to talk to you about your investments, to take any ISA applications you'd like to make, or just have a chat. Thank you.